Hi, this is PR Sundar. Welcome to Dalal Street Week Ahead program sponsored by Delta.Exchange. I'm having workshop in Bengaluru, so therefore I'm not able to do the video, just recording the audio. On Friday, the global markets were terrible. Japanese market has fallen 6%, and Thursday, Friday put together, Japanese market has fallen more than 8%. On Friday, US markets also crashing down drastically. US VIX has shot up almost 50%. So things are looking very bad globally. There are few reasons. Number one, Japan has increased the interest rate. So that may affect the yen carry trade. So yen carry trade means, people borrow in yen at almost zero interest rate, invest in the global markets. But when a Japanese government increases the interest rate, their currency may appreciate. So because of that, although they don't pay interest, but appreciation in currency will make a dent. So therefore, they might close their positions in the global markets. They might return the money to Japan. And the more and more money is being returned, the more and more Japanese currency will appreciate. So that's going to be a big problem for the world markets. The second problem, suddenly people started talking about economic recession in US. Mostly, people like economic recession. That's when the government will reduce the interest rates. But now, suddenly this economic recession news making a huge dent in US markets. Nasdaq 100 has fallen about 11% in last 1 month from the recent high, and S&P 500 has fallen about 6%. But our markets were resilient. Despite such a huge hangama in global markets, a Nifty fell only about 300 points on Friday. Even on Friday night, GIFT Nifty has fallen another like 60, 70 point only, not a big deal. However, we have to wait and see how the global markets are going to react on Monday morning. I'm sure the Asian markets will react negatively. So we might gap down about 80, 100 points, but then what is going to happen after that? So what these FIAs are going to do? Because most of the yen carry trade, it's done by FIAs. So continuous profit booking is possible. So I would say we are at a, inflection point. And although domestic mutual fund money is flowing into the market unabated, but the kind of selling by FIAs, the kind of global sentiment, things may not be very, very bullish. And in fact, for the last few weeks, even before the budget and after the budget, I've been giving some bearish view, but despite that, market were moving higher. In fact, after the budget, despite the worst budget, Nifty actually crossed 25,000 after the budget. As of now, there is no danger for our market, and but 24,400 is supposed to be the first line of support, and because that was the low made in the first trading session. I always say, the government can afford to do negative things because the markets are at all-time high. Even if it falls 5-10%, nobody is going to bother. But things are really getting back to worst globally. Definitely, it is time to be very, very cautious in Indian markets also. Domestic money will continue to flow. Retail people will continue to support the market, but FIA is likely to withdraw more and more from Indian markets. So next week is definitely going to be very volatile. It's going to be a problem. Time to be very careful. Time to keep positions low. This is not the time for aggressive trading. And more corporate results will be coming. So I didn't have time, so I did not see the SBI results. I don't know what was the SBI results. And tomorrow markets will be reacting to SBI results. And the Bank Nifty was resilient on Friday compared to other indices. And now we have to see how markets will be behaving. I'm expecting market to take support only at 24,000. So I don't want to keep 24,400 as the lower limit. So for the last series, that is a July series, the markets throughout the month traded between 24,000 and 25,000. Few times went close to 25,000, few times close to 24,000. For the time being, in between I became more bullish, so I forecasted 25,500. But now 25,000 will become resistance, mainly because of the global cues, right? So now once again we might be moving back to 24,000 to 25,000 range, at least for 1 or 2 weeks, and we want to see the US markets stabilizing. If US markets and Japanese markets are not stabilizing, so we might be in trouble, right? So this is a time, one can consider doing some kind of call ratio trades. If the market falls, they can make some benefits. So I am suggesting, buying a 24,000 call in December series, okay, selling 26,000 call, maybe 3 times or 4 times, so that, if the market consolidate between 24,000 and 26,000, one can make some good money. Of course, understand the risk and reward before taking any position. So this is not a, this for just for education purpose I'm giving. So I'm not recommending anyone to take this trade, right? So I've been giving my view with some media interviews also. So next 4 to 5 months, our market will be a challenging market. It's not going to be a smooth ride like, from last November to this year, June. And but one thing, good thing about India, no matter what happens, our markets are good. One of the worst budget, global situation is deteriorating. So despite all these things, things are looking very good in Indian market. Just one trading session, so Nifty shot up 400 point on the first trading session of the series. Even that is not getting corrected now. But at the same time to be careful. Looking at the open interest also, like 25,500 call is having a huge open interest, and the premiums are good. But for weekly options, I still believe 24,200 to 25,000 may be the range for the next 4 trading sessions. But VIX is likely to shoot up and the option premiums likely to increase. So that indicates that, it is time to be cautious. So rest of the things we will discuss tomorrow morning. Hope you enjoyed listening to this audio. Thank you for listening.